As you can see from the analytical charts, Malaysia's trade performance for both goods and services had an initial drop in early 2020 due to the pandemic shutdowns, but it is quickly rebounded, entering strong year-over-year growth. Goods trade expanded consistently, supported by resilient manufacturing sector, especially electronic and electrical exports, while services shifted from a long-standing deficit to a net surplus by third quarter 2025, driven mainly by a major surge in travel receipts after borders fully reopened. In the final quarter of 2025, both goods and services are expected to remain strong. In October, we hope to see higher domestic consumption imports and increased outbound travel for the Deepavali festival. In November, there will be slightly moderates but stays high as global retailers stock up for year-end and business services remain active. The last but not least, December reaches a peak levels with strong electronic and electrical exports, sustained trade surplus and the highest inbound tourism of the year during Christmas and New Year. Malaysia's trade performance is driven by two main growth engines that recovered strongly after the 2020 slowdown. Domestic export formed the stable core of the economy, making up 75 to 80% of total exports and showing steady growth after a clear V-shaped recovery. These are genuine Malaysian-made goods, mainly manufactured items like electronic and electrical components. Re-export, on the other hand, are the fast-growing and more volatile part of the trade sector. Their growth accelerated sharply from 2023, and their share has recently risen to 20 to 25% of total exports. Since re-export involve high-value goods passing through Malaysia for regional distribution, this increase shows Malaysia's growing importance as a regional logistic and distribution hub. Overall, domestic export provides stability, while re-export adds a strong high-growth boost to total export performance. Malaysia's imports from 2020 to 2025 are mainly made up of intermediate goods, which account for 65% to 75% of all imports. These are raw materials needed for the country's export-driven manufacturing sector, showing that import growth is driven more by production needs than household consumption. For capital goods imports, hold the smallest share within 10% to 15%, shown the fastest growth, indicating strong and ongoing business investment in machinery and equipment to boost production capacity. For consumption goods imports, increase steadily but remain a smaller, stable portion of total imports, reflecting consistent domestic spending. Overall, Malaysia's import structure highlights an economy centered on manufacturing inputs and industrial expansion. Malaysia exports evolution starts from 2020 to 2022, where exports rebounded in a clear V-shaped pattern, driven mainly by the electronic and electrical sector as global demand for semiconductors surged during remote work and digitalization. During 2023 to 2024, electronic and electrical strengthened its position as the main export pillar, while re-exports grew quickly, reflecting Malaysia's rising role as a regional logistics hub. By 2025, the sector is benefiting from a new tech AI-driven, keeping electronic and electrical firmly dominant. This evolution shows a shift toward high-tech manufacturing, supported by stable agricultural exports and expanding high-value regional trade. Malaysia's 2025 economic growth is largely driven by export-oriented sectors, especially manufacturing sector. Electrical and electronic products remain as the top export, making up over 45% of total shipments due to strong global digital demand. Agriculture, or mainly palm oil, also provides steady export earnings. These strong performances support Malaysia's trade surplus and help GDP grow 5.2% in third quarter of 2025. Manufacturing remains the second largest contributors to GDP, showing that Malaysia's economic outlook in 2025 depends heavily on its high-performing export sectors. Malaysia's main export markets in 2025 are Singapore, the United States, and China. Singapore remains the top destinations, while the US and China frequently alternate between second and third place. Heavy reliance on these major economies, along with Singapore's role as a regional logistics hub, shapes Malaysia's trade policies, particularly its strategy of neutrality and supply chain resilience amid global tensions. Strong export activity with ASEAN partners such as Singapore, Thailand, and Indonesia also supports Malaysia's focus on regional integration and trade facilitation. Now we will look at Malaysia's state export contribution in 2024. The export data for 2024 shows strong regional concentration, with Pulau Pinang clearly leading as Malaysia's top export state, followed by Johor and Selangor with similarly high volumes, reinforcing for the dominance of the Western Peninsula region in sustaining the national trade surplus. Their roles are distinct, with Pulau Pinang as the electrical and electronic manufacturing hub, while Johor and Selangor function as major centers for manufacturing, logistics, and regional trade. Other states record much smaller export values, underscoring the highly concentrated nature of Malaysia's export economy. Let's take a look at the evolution of import throughout 2020 to 2025. Malaysia's imports moved from a sharp pandemic decline in 2020 to strong dual growth by 2025. In 2021 to 2022, a clear V-shaped recovery occurred, driven mainly by a surging intermediate goods used in the booming electrical and electronic export sector. From 2023 to 2025, this momentum continued, but with a key shift. The intermediate goods remained as the dominant, while capital goods grew rapidly, reflecting rising industrial investment and capacity expansions. Overall, imports became increasingly shaped by high intermediate goods demand, supported by fast-growing capital goods that strengthen future industrial competitiveness. The analysis charts shows Malaysia's 2025 imports are led by electrical and electronic components and other intermediate goods, which form the largest share and are essential inputs for its export-driven manufacturing sector. Their high volume highlights the country's strong dependence on global supply chains. At the same time, rising capital goods imports, mainly like machinery, reflect increased business investment to expand and upgrade production capacity. This import structure signals future industrial strength and shows that Malaysia's trade balance depends on efficiently converting imported inputs into high-value exports. Now we will look at top Malaysia's import sources in 2025, which are led by China, Taiwan, and Singapore, showing that Malaysia's deep integration in the Asian manufacturing supply chain. China remains the dominant supplier, with its share increasing throughout the year. This dependence, especially on China and Taiwan, reflects Malaysia's import structure, which is driven by electrical and electronic components and intermediate goods from these high-tech hubs. While this ensures local factories receive the high volume, cost-effective inputs needed for export manufacturing, it also creates vulnerability as reliance on a few key suppliers exposes industries to supply chain disruptions and geopolitical tensions in East Asia. The analysis charts of trade by FTA ASEAN countries shows that Malaysia's trade with its ASEAN FTA partners is crucial, with the region forming a major share of its total trade under agreements like A3. Singapore dominates as Malaysia's top partner and serves as a key transshipment and logistics hub, especially for electrical and electronic exports. Thailand and Indonesia are also important markets, though their trade flows tend to fluctuate more. The FTAs help Malaysia by removing most tariffs and improving cross-border trade facilitation. This regional integration strengthens economic resilience by maximizing the ASEAN market and reducing dependence on major external powers. The trade relations under the ASEAN FTA, especially A3, influence Malaysia's economic stability and trade surplus. This is because ASEAN is Malaysia's largest trading partner, and tariff elimination keeps exports cost competitive. Singapore remains the key partner and transshipment hub, expanding the global reach of Malaysian exports such as electrical and electronic products. By lowering input costs and widening market access, the FTA strengthen local industry competitiveness, support the GDP growth, and enhance supply chain resilience. This approach aligns with Malaysia's strategy to deepen regional integration and safeguard the economy from external geopolitical risk. Malaysia's trade outlook for the next 5 years is expected to remain strong and resilient, supported by steady current account surpluses. Good export will continue to be driven by the electronic and electrical sector and boosted by rising re-export as Malaysia strengthens its role as a regional logistics hub. The services account is also set to maintain its net surplus, mainly due to the sustained recovery of tourism. High levels of capital goods import indicate healthy domestic investment and future production growth. The main downside risk is geopolitical tension affecting supply chains linked to China, Taiwan, and the United States.